section in how markets move. Different people do different things, different currency pairs, different instruments move and behave in different ways based in the same way. It's human sentiment that's driving the markets after all. So let's explore gold. Let's see what's been going on. The thing to consider now is because we have 3 days till the end of the month. Look at the monthly, look at the quarterly as well. We are approaching the end of the first quarter of the year already. Time goes quite fast. What you can see here, if you look at this on a quarterly point of view, I was looking for further upside. Ultimately, I was looking for new highs to be made. We didn't break to 2070. We've held quite nicely, and we've just dropped off. But we did notice that on the quarterly, at least, we did see renewed volume coming in, and so that's quite interesting. And so what's gonna be happening over the next 3 months? Are we going to see this filled eventually, and new highs being made, further upside, with gold, new record highs being made? Certainly the setup is there. We did have divergence several quarters ago, going back to sort of 2019, 2020 during the pandemic, and we did, to be fair, have a reaction based on that movement, and it was quite nice. So that's done a whole move to the downside and done a retest. Then we had this whole war going on with Russia, which is just going to drive the price of gold up, because there's going to be that impulsive move up, which we then see this month as a result. And everything broke out. To be fair, it broke out last month though. We were already sitting with that bullish momentum, so for this to go up and retest that high, had we not had a conflict, I think maybe I would have looked at the reaction at the 76.4 for a potential sell opportunity. Just explore this curl over. Look at the range. Look at how price has behaved. Again, bigger time frame. We've had this beautiful pullback to $1,000 going back to 2015, and since then we've just been up and up and up and up and up. And we have a 382 correction. So again, looking for new highs to be made. Didn't quite have the legs to get up there, but yeah. But we did break out, so I left it on there. But we do see divergence on the monthly, and that I think has been reflected. We've had this whole impulsive move, and then literally it's given it all back. Again, the news from the war. What do we call that? We call that an impulsive move. Impulsive, and now the correction. Impulsive and corrective. So we have the impulsive drive up, followed by the corrective move to come back and give it all back. And then after, now that it's done impulsive and corrective, where to next? Well, it can do one of two things. It can either break and go down, or now it's done the correction, we can then see it go back up gradually and retest, and then go and break and make new highs. I'm going to explore and keep one eye. 3 days to go. I want to see how the monthly closes. We're going to close bearish, or we're going to stay bullish. That's going to be interesting next few days. So based on that might give us a bit more information. We are seeing divergence, and we've had that so far. Let's drill down again. Let's go to the weekly. See what's been happening last few weeks. So we had a beautiful sell-off last week. We did try and go up, but on Friday, when you looked at that 1960 on Friday, we rejected. We failed. If you look at this price action on, say, a 4 hour or the daily, which we're going to do again, you can see that move up that we've had stalled at around the 38.2, which was 1962. That was my upside target. That's the target I was talking about a few weeks back when we had this impulsive move up with the Fed news, FOMC. They raised interest rates, and we had this impulsive move up to 1950. And then it dropped back about 76.4. So let's have a little explore, a little bit more of a drill down. Let's go into a bit more detail again. Last week was bearish. Are we going to find some support maybe by today, tomorrow? And is it going to find support and then rally back up and just stay bullish and hold and see another bullish week? Again, that remains to be seen. Certainly from a weekly point of view, we had a nice weekly push up. So is that going to be the start of a much bigger move up, maybe 2,000 again? Or will we take out this low and just drop? I mean, if it takes out structure here, from a weekly point of view, we could just be falling off a cliff here. We could just be going all the way back down quite considerably. lower. So we want to explore that as well. So it's good to see. So let's go to daily now. Start looking at more intraday price action. Let's look at what was happening last week, end of last week. Something else worth noting. We talk about weekly cycles. So we talk about price. Always pay attention to whatever happens on a Friday if there's a trending move. And we had a little bit of a kick down on Friday. So then we've come in today, and that's basically just continued. So we had a revert, we had a sell off, and then Monday we tend to see that continuation. If it was bullish on Friday, we would have perhaps been looking for further bullish upside today. Again, what happens with retail traders, they lack that patience, and sometimes they'll come in on the Monday and just assume it's going to go the other way. and it's like, well, no, actually, this needs to finish off the move. So in this case, being bearish, needs to finish off the move to the downside. And so, again, 1916 seems to be providing that lovely bit of support, the 382. But you can see here, today, we're coming back down and retest it. So if it wants to retest it, you know what we talk about, where it tests a certain area 3 times. This is 1, this is 2. This is potentially a third test. If it comes and breaks it on the third test, this is going to break. And we're going to start looking for 1870 as a next potential downside. And that's going to be the next 50% fib based on this last impulsive move up. And what am I looking at in terms of price action? Well, I'm looking at that last swing low that we saw. That's quite nice. So down, and then maybe breaks, so we'll look for the next fib, and then the next fib, and so on and so forth. And that's what we look at. And it's quite nice today that we're seeing that. We have had a nice correction off the 382. So let's go now to the 4 hour, and let's look at this in a little bit more detail. So this is how I do it. Obviously, when you've got these charts up and you're trading, all of this you will do in minutes, because you'll have already done it. And if it's in your watch list, you probably already know what it's been doing the last few days, few weeks anyway. So this is not something that you probably need to spend as much time on. But I like to do the step-by-step process, because the process is the most important aspect to trading. It is about remembering to do this process on a regular basis. And if you've just come in off the weekend and you've had a really nice weekend, you might not even bother to look at charts, which I didn't really do much staring at it yesterday or Saturday really. So it's nice just to refresh your thinking, your memory, and everything else. It's nice to have a bit of a respite and come in and just pick up from where you left off. So this is what I'm looking at, 4 hour. We've had a nice 382 correction. We've had a nice wave 1, wave 2 pullback, wave 3. The wave 3 would suggest that this could therefore just be a correction. And so wave 3 could well see this going all the way back up and looking for that 1980. So the next fib to the upside as well. In the same way that we just highlighted the fibs to the downside, if this does find some support, then up we go. And we're looking for 1980. As the next upside level. So we've done a 382, and the next one would be the 50. See if it can do that. So we want to say, right, okay, let's put a trend line on here. Let's explore, are we going to see a higher low being made here? So there's the low, there's a higher low, there's a higher low. Let's explore that again. Let's look at it in a bit more detail. I'm using my EMAs. I have here on the 4 hour, I've got a 200 EMA that seems to be working quite nicely. Again, we're coming back down to test it for a third test. That 3 times example, this could be the place where we find the support and it reverses and goes up. Certainly, I can see the volume on these daily and 4 hour time frames. When we talk about our awesome oscillator and we're looking for volume, the volume's not there to the upside at all, is it? It's very weak. Even on a 4 hour, we've just broken momentum to the downside, and we've just been kicking down today. And again, that would have helped you provide, as we were crossing over last few days or Friday into today, that could have helped you get in on this move, or given you that extra confluence with MT strategy. And so what is the MT strategy? Well, it's looking for that momentum, on the 1 hour, on a 4 hour high time frame. We're looking for price to cross back over into bearish territory in this instance. And so then you're looking for it to cross the 382. And that's what the momentum strategy is about. MT. It's not so much about strategy it is. It helps you get in and confirm that this is the way that you want to go down. You don't want to be looking for longs. You want to look for it to break the 382 for that extra confirmation, for that extra, belief that this is actually going to go. And then you capitalise. And, certainly there is another 100 pips to the downside that you could have taken off and just follow the move down. You can see here that I am actually just stalking the price from on my 1 hour chart. If I extend this, scrunch it up, everything's just been moving really sweetly on gold the last month or so, I have to say. I was looking at some stats. If you go into the My Forex Fund Discord, my Discord, and have a look under my Forex funds under the prop firm challenges, it was interesting. They always reel off different stats, and one of the guys was saying that this month or this last week, gold and pound yen was where people were losing money the most. And that was interesting because we have a process. We actually made money last week on both of these instruments, gold and the pound yen, trading divergence strategy on the pound yen, trading the 764 strategy on gold. Because we have a strategy and a plan, we make money. It doesn't matter. Everyone around us might be losing money, but we made money because we have a system, and it's a proven system, and we just trade that system, that process. And so that was quite interesting to see. So regardless of what the stats are, you're there to break the mold. You're there to break those stats. You're there to be the 1% that are making money while everyone else around you might be failing. Why? Not because of anything more than having a proven strategy that you can believe in. That's the process that you're getting involved in. So, here, right, bigger picture. Getting back to it, let's have a look at this price action. Let's look at where this journey started from the upside where it rejected. Let's look at how you and others were able to make money on this. Let's stick with the 1 hour for the moment. Let's pull this back just to get it out of the way. I'm watching the price action, just looking at how price is behaving at this level. It's sort of stalling at that 618 at the moment, which is cool, makes sense, because I highlighted it this morning. So we had this first impulsive move down. It hits a 200 EMA, which is a secondary confluence, worth having on your chart. You can see price trying to break the volume to the downside, but there's just no volume. Very flat. So it was quite sluggish, but downside was where we were looking. And then we had this move up, this impulsive move, and we did have some news, or something did happen on Friday afternoon with the news that we had, and it pushed the price up. And I said, right, let's look to short. And you were on it as well. You were there, you were watching it, and you knew exactly what you were looking for it to do. And so when it played out, you understood it, you got it, and it's great, because this is what we're trying to share and show. Once you know, now you see this price action. This is what you're looking for. It can't be unseen, and it's kind of nice, really. I feel like my work's done, because I've managed to give you something that now you can just spend the next few weeks, months, years refining, getting really good at spotting these setups and capitalising, monetizing. You're going to monetize this information, and that's it. And no drama. You can be a little bit excited, but just keep your cool and just think, okay, I'll just look for these setups, and then this is what you're looking for ultimately. Bosh, nice bit of selling. So this is your wave one. Let's just pull this to the side a minute. Let's just pull that over there like that. There's your wave one. So wave one, wave two. I think I have an Elliott wave tool here. Here we go. Yeah, there we go. So it will go like, it would be like that, wave one. People ask me about this wave one, and I said, well, the thing about the wave one is that it's an impulsive wave, and what happens is sometimes people can get a little bit excited and just jump in, and that's cool, but you have to be mindful that it could go back up, because you don't know what sort of a wave one move you're going to get. You've got to look for little telltale signs, support, and look for it to reverse. And so we're always looking for the reversal, and then it's basically answered that question. Are we going long? Are we going up? No, we're not. Okay, great. So let's get involved in the wave three move. Let's really have a go to the downside. Let's look at where's the 161, 176 extension, somewhere down here. Great. And then as for a wave four and a wave five, Well, they are very subjective. I don't put too much emphasis on them. And if you watch the Aussie Swiss video that I've uploaded, I talk about this as well, because the Elliott wave setup was there as well. But this wave 1, wave 2, that's just priming you and setting it up perfectly for your wave 3. This is the one where you make your money. You do your money here, you're done. That's it. You know, you could potentially be done for the week. Looking at those stats from the successful traders, the consistent traders, what do? Once they make 4% to 8% a month, they just wait for their payout. You know, if they're trading a prop firm, they wait to get a payout. It doesn't matter. You know, they've got a week left. Like me, I'm done for the week. I'm done for the month. I'm not going to do any more trades. The only trades I'm going to take this week is if you or the other traders out there send me a setup. Could be on anything. You say, what do you think to this? Does this look like a 764 setup? And whatever. And then what I'll do is I'll help you connect the dots, fill in the blanks, and we can take that trade together. So I'm going to trade with you and anyone else who wants to share setups with me. I'm not going to look to be bothered too much to take my own trades, as it were. Does that make sense? You know, that way I'm encouraging you, I'm getting you out of your comfort zone a little bit. Let's look at this wave 3 extension. Let's just be clear on how we do this. Elliott wave, so wave 1 and 2. So what we do is with the wave 1, when it pulls back, we want to measure that. So we go like that. And you can see I've got a preset with my fib. So all I've done with this is I've just got rid of all the fibs that were in the middle, you know, 38.2, the 618, you know, 50, 764, all of them. I've got rid of them because I'm looking at the wave 3. This is, you know, this is the area I wanted to get down to. And what's beautiful about this, it marries up quite nicely with the whole bigger picture. You know, the 50% of the bigger picture's there. That's quite nice. And what's interesting still as well, just to show you very quickly, is where's my chart? Is this gold? Yeah, this is gold. What I've done here is I did have it on there. I think I've removed it now. But you see this last pullback as well, and this impulsive drive up. I had that on there, looking at price action, how it behaves. You know, maybe we could get down. I was looking for about 24 as a 764. Sometimes it's just not an exact science. Fair enough. Then don't take the trades. You know, you don't have to go long here. It's fine. To me, this hasn't finished to the downside. I need it to do what it needs to do. But prior to that, I'm not going to start chasing this up or chasing it down here. I'm not. There's no point. But what I will do is get involved when it was like this the other day. You know, this was perfect. It went up and it hit the 76.4 on that pullback. So I'm going to get involved. Let's get involved. And it was, yeah, it's beautiful. Even here, because, again, you time the entry, because you get that clinical entry up here, like the other one-to-one trader did, you know, 55 pips on a Friday afternoon, no drawdown, straight into profit. I think he got a 1 to 4 or something in terms of profit, risk to reward. He's in up here. You know, instantly move your stop to break even. It never touched. It never went back. It never stopped you out. So this is why you have at least 2 positions on the table. You take some off at the first move, so you get that. You're looking for the 382 pullback like this. Great. Down to 55 from 60. Where is that? 60, 61. Say. That's nice. And it did that, and it actually went past it. But yeah, easy, no drama. Let's go to like a 15-minute chart. Let's have a look at it in a little bit more detail. Really nice, really, really nice. And you understood this, didn't you? You got it. You were looking at it. You know, how did you feel about it? Did you feel quite excited? Did you think, actually, this is good? You seem to be really quite delighted. What do you reckon? It was good, right? It was. Oh, are you there? Doing what you're supposed to. Yeah, that'll do. That's fine. You know, when something's doing what you're training yourself to see and find and identify, you know, what I'm sharing, what I'm teaching. If it's doing what you're supposed to do in that respect, that's it. You don't need to overthink it. Exactly that. I guess I couldn't have put it any better myself, to be fair. So, yeah, brilliant. Now we're expecting price to react. Look, price is behaving now, reacting here. Are we going to see a bit of a move up? Yeah, let's see what sort of a wave 4 correction we get. Wave 4 is supposed to be a 38.2 of a wave 3. So in theory, it should be, it's supposed to be that. It's supposed to come back up to, say, I guess up to 40, 39 area. That would be the pullback, I guess, to there. But I've seen it go up higher to 50, 618, even 764. What I would say is with the wave 4, what I really like about the wave 4, I don't trade the wave 4. Made my money on this move down. Helps me move my stop loss and everything else. This is why you needed 2 positions. You get in here, you take one off here if you want it to be conservative, take one off here if you want to be conservative, take a little bit off each time. But ultimately, you want to be involved in this move if it develops. You know it's going to break that low and it's going to take it out, and you want to get involved at least down to about here. And now you take maybe maximum profit or trail your stop loss. But this is great, you can get good at this. So it's all very well identifying and spotting these setups, but the next stage now is to actually really monetize it and just see what sort of money you can make, what sort of profit you can make. So live account, demo account, whatever, just see what you can do. And you want to get really, really good at holding and being proficient at managing this price action. Sometimes it can get a little bit choppy. This, thankfully, didn't give you any drama at all. It did what it had to do. Bounce off there, job done. Pulled back, didn't ever go up and challenge that entry point. Never gave you any drama, any trouble there. Brilliant. Done. Now, wave 4, what we can do is wave 4, we can look at how price is going to react at these levels. Am I going to buy up to here? No, I'm not going to do that. Why? Because it's a wave 4, and also, in from a bigger point of view, bigger picture, daily, we're bearish. So no, I'm not going to be buying this back up. It's a corrective pullback in my view, so I'll allow it to correct. And if it gets up to that 764, if it does manage to get to 53, then I'll consider shorting for a wave 5. So that'll be my next setup. Ultimately, that would be my ideal entry point for my next setup. So when all is said and done, getting up somewhere like a 53 area, back up to the 50s, I'd be keen to look at considering shorting there again. Will it get up there? I don't know. What sort of retracement are we going to get? Not sure. Let's see what happens. Let's allow it to go up. Let's clear up some of this price action. Get rid of that now, and just leave this one on as the price action we're looking at. It's the current low, just to measure this pullback. This sort of pullback we get. But yeah, keep it on maybe another chart, the Elliott Wave 3 move, and measure that, because maybe 53 would be the place for it to get up to. This is the whole range, and that gives me 56. So, say price did get up to 50, 50s, into the 50s, so 50 to 56, anywhere up here, could be a good place to short from for the next leg down, So again, we're just watching how price marries up. But that's why wave 3 is the good one. That's where we make our money. We get that. 764 gives you the precise entry. Imagine if you still have your original position short from 1960. It's now at 1928, 1930. That's 300 pips later. Absolutely on the money. Perfect. And ultimately, if it does break structure, we'd be looking at getting down to like 1911, 12. Would I short it from here? No, I don't, You had the opportunity to short up here, anywhere up here. If you're not in from up here still, you can't be chasing it here, can you? So, but anyway, that's how we do it. That's how we break it all down. That again, step by step. Hopefully, that is going to give you, along with the Aussie Swiss video, going to give you some absolute nuggets, priceless, valuable information on how we look and view price action and what we're looking at. I'm just stalking the price and knowing where it's going to next, what's the next move, and you just know. And that way, you never just jump into a trade guessing, thinking, oh, that'll do. No, you wait for the next setup, wait for the next precise entry. You're patient, you sit on your hands, and then you get involved and you monetize that information. Wait for the next setup. Repeat, rinse and repeat, so on and so forth.